Hey everyone, welcome back to Corporate Decoder. Today, Fubo Corporation just filed its quarterly report, and I'm seeing some very interesting numbers that reveal exactly where this company stands financially. Quick note, this is not financial advice, just my take on public filings for educational purposes. We will dive deep into the financials to see how Fubo is really doing. Alright, let's start by looking at the big picture for Fubo Corporation as revealed in this filing. We are looking at Fidelity Advisor Series I, a registered investment company. This document is a certified shareholder report covering the period up to the 30th of April 2026. It provides a detailed look at the company's financial health and investments. The report details the performance and holdings of specific funds within the Fidelity Advisor Series I umbrella. We can see reports for Fidelity Advisor Value Fund, Fidelity Advisor Capital and Income Fund, and Fidelity Advisor Floating Rate High Income Fund. These are essentially different investment portfolios managed by Fidelity Investments. Let's focus on the costs associated with these investments. For a hypothetical $10,000 investment in the Fidelity Advisor Value Fund class, Z shares the costs were about $40 or 0.73%. Class M shares had higher costs at $75 or 1.37%. Class C shares were the most expensive at $103 or 1.88%. This difference in cost is important because it directly impacts how much of your investment actually works for you. Higher costs mean less money working to grow your investment. The overall fund size for the Fidelity Advisor Value Fund as of the 30th of April 2026 was a substantial $376,132,861. Looking at where the money is invested for the value fund, we see industrials make up the largest portion at 24.3%, followed by financials at 16.9% and healthcare at 10.6%. This tells us the fund managers are heavily invested in traditional industries and financial services. The vast majority of the fund's assets are in common stocks, 98.7%. This means the fund is primarily focused on owning shares in publicly traded companies aiming for growth through equity investments. The geographic diversification is heavily weighted towards the United States at 88.4%. This indicates a strong focus on the domestic market. The top holdings in the value fund include Western Digital Corporation at 3.1%, SanDisk Corporation at 1.4%, and PGG Corporation at 1.3%. These are significant individual company holdings, meaning the fund's performance will be quite sensitive to the performance of these specific companies. Now let's shift gears to the Fidelity Advisor Capital and Income Fund. Here the fund size is much larger at $3,008,872,288. Scroller 0.0% DIBI. This fund has a very different investment approach as shown by its quality diversification. Our rated securities are 0% BBB rated, are 4.4% BB rated, are 17.1%, and B rated are 20%. This shows a significant allocation to lower rated debt, which means higher risk for higher potential yield. The asset allocation shows a large chunk in corporate bonds at 40.0%, common stocks make up 21.1%, and bank loan obligations account for 7.7%. This fund is clearly targeting income generation through debt instruments and some equity exposure. Geographically, it is even more concentrated in the United States at 93%. Top holdings include an iShares Broad USD High Yield Corporate Bond ETF, a Fidelity Private Credit Company LLC, and EchoStar Corporation. The presence of a high-yield bond ETF suggests an aggressive risk profile aimed at maximizing income. Finally, we have the Fidelity Advisor Floating Rate High Income Fund. This is a massive fund with a fund size of $13,934,097,136. Scroller 0.1% F.U.B.O. The quality diversification is again heavily weighted towards lower rated debt. Our rated securities are 0.1% BBB, rated are 1.6% BB, rated are 21.7%, and B rated are 59.8%. This is a very aggressive allocation to speculative grade debt. The asset allocation is dominated by bank loan obligations at a whopping 89.1%. This is the core strategy of this fund, aiming to capitalize on floating rate debt which can adjust with interest rate changes. The geographic concentration remains very high in the United States at 91.8%. Top holdings include Great Outdoors Group LLC, Assurion LLC, and Acrisha LLC. These are notable for being private credit investments, indicating a focus on direct lending and potentially less liquid assets. Now let's zoom into the financial statements themselves. For the Fidelity Advisor Value Fund Class A for the 6 months ended the 30th of April 2026, the net asset value started at $36.37 and ended at $40.61. Net investment income was a positive 0.05 per S-share for this period. The portfolio turnover rate is a striking 100%. This means the fund managers are very actively buying and selling securities within the portfolio, which can indicate a dynamic strategy, but also potentially higher trading costs. Looking at the statement of assets and liabilities for the value fund, as of the 30th of April 2026, we see total assets of $388,156,784. The net asset value per S-share for class of shares was $40.61. The statement of operations shows investment income of $2,452,938, with expenses totaling $1,714,144, leading to a net investment income of $738,794. The fund saw a net realized gain of $32,394,690 on investments, and a significant change in net unrealized appreciation of $31,881,238. The investment valuation section breaks down how assets are valued. Most of the fund's equity securities, most notably communications, services, consumer discretionary, and financials, are valued at level 1, which means they are based on quoted prices in active markets. This suggests a higher degree of liquidity and transparency in their holdings. Looking at the financial highlights for class of shares, the total return for the 6 months ended the 30th of April 2026 was 20.84%. This is a strong performance for a 6-month period, demonstrating solid growth for investors. Expenses before reductions were 1.13%. This is an important figure as it shows the fund's operating costs. Let's look at the Fidelity Advisor Capital and Income Fund schedule of investments. This fund's investment landscape is quite different. It holds alternative investments totaling 2.1%, which can include private equity or hedge funds. The asset-backed securities portion is 0.2%, and interestingly, a large amount is in the Grand Cayman UK overseas territories. As we noticed before, the main area of investment is bank loan obligations at 89.1%. This means the fund is heavily invested in loans to companies where the interest rate can change over time. It also holds 40% in corporate bonds, adding to its income generation strategy. Again, a massive 93% exposure to the United States market. Top holdings here include an iShares Broad USD High Yield Corporate Bond ETF and Fidelity Private Credit Company LLC. The focus on high yield bonds and private credit indicates a strategy that seeks higher income but comes with higher risk. The notes to the financial statements are crucial for understanding the details. For the Fidelity Advisor Capital and Income Fund, there is an investment in Fidelity Private Credit Company LLC, an affiliated entity which makes up 2.1% of the fund. This represents a significant allocation to private credit strategies. The value of this investment at the end of the period was $62,954,042. The statement of assets and liabilities shows total assets for this fund at $3,044,643,335, showing its substantial size. The net asset value per S-share for Class A was $13.12. Net investment income for the 6 months was $58,022,890. This fund is generating substantial income. However, the fund experienced a net realized loss of $30,138,792 on unaffiliated issuers, a key point to watch, and a notable change in net unrealized depreciation of $151,216,569 on its investments. This shows the volatility in the market impacting the value of its holdings. Now for the behemoth Fidelity Advisor Floating Rate High Income Fund with a fund size of $13,934,097,136. Scroller 0.1% DB. The quality breakdown here is extremely aggressive, with 59.8% in B-rated debt and 0.1% in a rated debt. This clearly signals a fund that is taking on significant credit risk. As expected, bank loan obligations dominate at 89.1%. This fund is all about floating rate loans trying to capture higher yields in a potentially rising interest rate environment. Scroll United States 91.8% for true. The US continues to be the primary focus at 91.8%. Top holdings are private credit instruments like Great Outdoors Group LLC and Assurian LLC. The significant allocation to these loans means the fund's performance will depend heavily on the creditworthiness of these private companies. The filings also detail the fund's investments in affiliated central funds. For example, the Fidelity Cash Central Fund saw purchases of $54,370,805 and sales proceeds of $55,125,983 during the period. This is a common practice for large fund families to manage cash efficiently. Diving into the financial highlights for the floating rate high income fund class A for the 6 months ended the 30th of April 2026, the net asset value began at $9.14 and ended at $9.03. Now this is interesting. The net investment income was 0.301 per S-share, which is solid, but the realized and unrealized gain or loss was a negative 0.111 per S-share, showing market depreciation impacting the value. The portfolio turnover rate for this fund is 35%, which is relatively low compared to the value fund. This suggests a more buy and hold or longer term investment strategy for this portion of the portfolio. Looking at the statement of assets and liabilities for the floating rate high income fund as of the 30th of April 2026, total assets are a massive $13,028,872,288. The net asset value per S-share for Class A was $9.03. The statement of operations reveals substantial investment income of $547,070,202 offset by expenses of $46,682,634, resulting in a net investment income of $500,324,568. This fund is a powerful income generator. However, the fund experienced a significant net realized loss of $30,138,792 on unaffiliated issuers and a very large change in net unrealized appreciation of negative $151,632,569. This indicates a difficult market environment for these types of assets, impacting overall performance despite generating income. And finally, let's quickly touch on the exhibits. We see certifications are filed as Exhibit 99 Cert and Exhibit 99906 Cert. These are standard compliance documents confirming the accuracy of the filings and the effectiveness of internal controls for financial reporting. The big story here across these filings is the diversified yet strategically focused approach of Fidelity within its advisor series. The value fund is investing in established companies with a domestic focus. The capital and income fund is taking on more risk in lower rated debt and private credit, aiming for higher income. And the floating rate high income fund is deeply entrenched in bank loans targeting income through interest rate adjustments, but facing market depreciation in its unrealized values. The financial tables give us a clear picture, but it is the allocation choices and associated risks that paint the full story of each fund's strategy. The sheer size of these funds also speaks to Fidelity's significant presence in the investment management world. While all funds aim for client growth, the paths they take and the risks they assume are quite distinct, showing tailored strategies for different investor appetites. The significant allocation to B-rated debt and bank loans in two of the funds highlights a segment of the market that demands careful monitoring due to its sensitivity to economic conditions. The overall picture is one of active management across various risk profiles, all operating under the Fidelity umbrella. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like and subscribe if you found this helpful. Please check the Discord link in the description.